Most crypto traders are doing it all completely wrong, and in today's video, I'm going to be sharing a stupid simple strategy to help you guys make more money within crypto. I'm going to be sharing exactly what assets you should be trading, what indicators you should be using, and how to take your entries and exits, and what to look for in order to take trades within the crypto market. Who am I? My name is Noah Diermeyer, and I am the head crypto trader at Profit Chasers, and I've helped teach over 55,000 students how to be profitable within the crypto market. And by the end of today's video, I believe I can help you guys just gain a little bit more profitability within your crypto trade. Today, we're going to be going over these 7 steps to help you guys be more profitable within the crypto market. And step number 1 is going to be picking your daily bias. So let's dive in. We're going to head over to the daily time frame and really look at the overall market as a whole, which I am still bullish on Bitcoin if we look at the overall market, not just the past couple days. Now that we have our daily bias as bullish on Bitcoin, we're going to go to the 4-hour and on to step 2, which is drawing out your key levels. So as you see here, I already have my key levels drawn on here to save time, but you want your key levels to be respected more than 2 times. The more the merrier, and the more the better, because the more price respects these levels, the stronger they are and the stronger value they hold. So as you see right here, price respects this level quite a few times. Same with this bottom one here. And then if we go back and look at historical data, so with this bottom one, as we see right here. Now on to step 3 is looking for imbalance within the moves, which is also drawing your swing highs and swing lows where there is imbalance in the market. So we see right here, we have a swing low and a swing high. But why do I draw it from right here instead of down here? Well, this is where you want to look for imbalance. And if we see, we get imbalance moves right here to the upside, creating tons of fair value gaps on the way up, showing that these are big imbalance moves to the upside. So I draw it from the swing low of the imbalance moves to the overall swing high. You just want to draw it where the swing high is, and you want to start it where the bottom is. Now, what are we drawing here, you guys might ask? And that is on step 3 is looking for imbalance within the market. And as we see right here, this is where we start to get imbalance on this upside right here, which is where we're creating lots of fair value gaps on the way up and lots of orders left behind due to the imbalance that we're seeing on this move to the upside. So now that we see where the imbalance is, it's not here. This is kind of choppy and grinding up. This is where we start to get those heavy imbalance moves to the upside. We're going to draw the swing low and the swing high. So that's where we want to mark the swing high of this imbalance move to the upside. That moves us on to step number 4, which is going to be drawing your Fibonacci levels from the swing low and the swing high of this imbalance move. I will show you guys my Fibonacci settings. Take a screenshot of these settings so that you guys can implement them on your charts as well. These are the settings and I see work best in the past 3 years of using Fibonacci retracement levels. Now that we have our Fibonacci drawn and ready to rock, step number 6. Now that we have our Fibonacci drawn, step number 5 is waiting for a corrective pullback into these levels. So we don't want to see a straight up and straight down to these levels. That's not what we want to do. We will not take those trades any day. What we want to see is a corrective pullback. We want to see price slowly work its way down to these levels. Now, the reason why we drew our support resistance, the reason why we drew our fib levels is we want to see if they align. So as you see right here, yes, we have it pretty high up here. If we look at this resistance right here, what I want to see is it come down and sweep into these discounted levels and then regain this support up here that we're looking at. That's why it's so important to draw key levels in the proper areas so that you can plan a proper trade. Now that we see we got a corrective wave to the downside into these levels, which is showing us that this is at a discounted price. Anywhere we draw these fib levels, that is what the fib retracement levels is showing us, that it is on a discount in those levels. We now look for confirmations to take a starter. So that's going to be step number 6, is looking for confirmations to take a starter. So if we look back here, I drew 2 fair value gaps that align pretty closely with my fib levels. So I'm going to be watching in this area to take a starter. As we see, price came back, corrective pullback, wicked into the golden pocket, and then respected this bottom fair value gap. So I took a starter right here. I'm in with a starter. Now let's say price comes on back and tries to go heavier into the golden pocket and then respects it again. This is where I would add, is once we inverse this fair value gap to the upside and then sweep it and go long. So now that we have confirmations, we have our fib level, we have our fair value gaps drawn. That'll hopefully be inverse fair value gaps on the ones that it creates on the way down. And we have our key levels. We now know and plan our trade of what we're looking for. So now we just wait for confirmation for it to respect this fair value gap one more time. And then I will add to my position every time it keeps sweeping with the low right here as a stop loss, which leads us into step number 7. You have to have risk management. If you don't have risk management, that is the key thing to either being a profitable trader or an unprofitable trader. You have to have good risk management. So what I'm doing here is I'm not adding up here risking these lows because that's going to be risking a lot of my account. Instead, what I'm doing is I'm adding as close to my risk as possible down here, risking the lows. So the more it sweeps right here, the lower it is to my average. I will take my position and take size, knowing that I'm not risking as much of my account because it's so close to my stop loss. So that's one thing that I want to encourage you guys to do, is always have a plan before you enter a trade. If you know that you want to enter up here, but you have to risk all the way down here, you're going to have to go in with smaller position sizing so that you're not risking more than 5% of your overall account. This is very key, guys, and I can't stress this enough. And there's a reason why so many other traders say proper risk management saves your account, is because it's so true. A lot of you guys don't even have risk management and don't even understand what it is, and just enter trades really risking anything, just hoping it goes up. But instead, we have to have proper risk management if we even want any of this to work. Because you can have a 3 to 10 win to loss ratio and still be a profitable trader with good risk management. So I just hope you guys understand how powerful risk management is, and I may make a video just solely on risk management within the markets here in a couple weeks. But again, thank you guys for watching. These 7 steps are going to be your key to being profitable within the crypto market, and I will not take a trade unless all 7 of these boxes get checked, and then I can enter and look for entries within that trade. But thank you guys for watching. Hopefully you guys enjoyed this video, and hopefully you guys learned a little bit about what you learned. And hopefully you guys learned a little bit about how you could be profitable within the crypto market. If you guys learned anything or want to learn more about this, drop a comment down below and let me know what you guys think of this video. But I will see you guys in the next video.